Hi there, my name is Teresa Timms, president of TDR Mortgage and Real Estate Group, serving the entire California market. I'm here with Ms. Heather Fox, a wholesale representative with one of the wholesale lenders that we send our non-QM loans to. Heather, please explain to the audience what it is that you do and why are bank statement home loans important in today's market?
So I am an account executive. I work for a wholesale lender. I deal with brokers, and we provide many different alternative programs for home loans and borrowers that have credit events.
Credit events? Oh my, what's that? What do you mean?
Credit events meaning like bankruptcies, foreclosures, deed in lieu, short sales, anything like that.
Okay.
Where they just can't go through the traditional, QM route. We do alternative loans for them.
So you're one of those subprime lenders. No.
Definitely not a subprime lender.
So that's not a thing anymore, subprime lending.
Subprime lending is not a thing anymore.
Okay.
That is a thing of the past. We are a non-QM lender.
And QM means qualified mortgage. Okay.
Absolutely.
So today we're going to debunk and hopefully shed some light on the mysterious bank statement loan. There are many facets to a bank statement loan. There are ways to go around the standard criteria that one would put in front of you or say that you have to adhere to. So bank statement home loans, they are the same everywhere. There are slight variances and some people do them better than others. People that have done them have better success at guiding someone to achieve success on a bank statement home loan because they are not easy. It's not like, oh, bank statements, you don't have to show income. Well, you don't have to show your taxes, but you're going to lay it out there in the form of showing bank statements to the lender. And as a loan broker, when someone says, hey, I want to qualify on a bank statement program, my first thing is, let's see the bank statements. Send me 2018, send me all of 19. Mm-hmm. Honestly, I prefer to just do 1 year. I find that the more you expose yourself, the more questions are and the harder things are. But Heather, tell me, you guys have a 3-month, do you have a 6-month?
We don't have a 6-month.
So
we have
3-month?
A 3-month, a 12-month, and a 24-month bank statement program.
So in general, when we are looking at bank statements to qualify someone, if you're looking at personal returns and I'm looking at 12 months and this person routinely deposits $10,000, $8,000, $7,000, $5,000, and then another month they deposit $50,000 and then all the other months are normal, what happens when you have that large deposit?
We will give them credit for it, but we need to source it because obviously it's not part of the trend of what they are normally depositing. If they can source it and we can see that it's business income, then
business related.
Yeah, business income.
Otherwise, you're going to back it out.
We're going to back it out.
Okay.
Yeah.
So now that would be the same with. So you can qualify with personal bank statements.
We can.
Absolutely. And would I give that person the 100% of the deposits as long as they're verifiable?
Absolutely, you got it.
Okay. Okay. So what about business returns? Now, business returns can be really tricky. I know my business returns, because I'm super successful, my business returns are like 50 pages of bank statement because I've got so much money going in there. Okay. I'm just kidding. My bank statements, no, they're like, 15, 20 pages. I think that's average for most entrepreneurs. Most business people have, 15, 20 page bank statement. So if I ask for 12 months, that's a lot of stuff to be pouring over. So we look through those bank statements and I guess I look for consistency. I'm looking to see, okay, they deposit 50,000, 20,000, 20,000, 5,000, 5,000. And then if I see like a $200,000 deposit, I'm like, oh, this is kind of out. Yeah, this is out of the norm. So how do you guys view that or how would you handle that?
I mean, we would do the same thing. We're going to back it out. If it's out of the norm, if we source it and we know that it's business related, then we're going to give them credit for it. But if it's out of the norm, we're not going to give them credit for it. unless they can prove that it's business.
So with personal returns, you're going to give them 100% of the deposits.
Correct.
And with business returns, you do not give 100% of the deposits. Why is that? That's good.
So, I mean, we give them 50% because we assume that every business has some sort of expense factor. There is, an expense in running a business. So our standard and industry standard across the board is about 50% of the bank statements.
Okay.
Unless they are a consultant, and maybe they work from home or somewhere where we can really see that it's just not necessary to give them 50% or take only 50% of their bank statements. We'll ask for a CPA letter or an expense letter from a certified public accountant or enrolled agent, stating that their expense factor is lower.
So I had that recently come up where I just took in half the business returns and he didn't qualify, and he was a consultant.
Okay.
And so we just got a CPA letter that said, this is to verify or validate that the expenses are at like an 89% factor. And thusly, I was able to get this gentleman to qualify for a home loan. And so it worked out nice.
Yeah.
But it has to make sense. I feel like everything in bank statements, it has to make sense. Okay, so let's say I do a 3-month program, Heather.
Okay.
And 3 months of bank statements. I'm going to qualify. I'm new to, I just started my business and I wasn't really making that much money, but now I want to buy $1 million house because I've been depositing $50,000 in my bank statement. So let me buy a house.
Okay. So are you saying that you're new to your business?
Yeah, I just started, but I've got 3 months of bank statements here. I want to buy a house.
Okay. So that's not going to be a loan for us. We need to have at least 2 years self-employment, either documented by a CPA or a business license. And if you're giving me 3 months bank statements, we're going to ask for 24-month P&L, and it needs to be signed by a CPA or enrolled agent.
So that's what I was getting at, that even though you may see these, 3-month, 6-month, 12-month programs, you still have to have been in business, and you have to validate that through some kind of a business license, a business listing, a CPA letter, right? I mean, you can buy a house with this substantiated 3-month bank statements, but you have to have been in business for 2 years.
Absolutely.
What is the least amount? Okay, so this is 2020. In the past bank statements, you needed to have, I would say you need to have like a 700 FICO, and you need to at least put 20% down. But some things have changed, and you guys had some new, more aggressive products roll out. And I'm super grateful because I feel like 10% is reasonable. Like when you guys used to make our borrowers come up with 20 or 25, that's a lot of money. So tell me about like the new trends in bank statement loans and what's going on out there.
Yeah, absolutely. So with us, we will allow you guys to do 90%. So actually put 10% down on a home.
Okay.
But you do have to have a 680 credit score, middle credit score.
That's reasonable. I like it. Okay.
Yeah. We will do 12-month bank statements and 24-month bank statements on that program.
Oh, for the 10% down?
Yes. And then the borrower is going to need to have 6 months reserves post-closing.
Okay, got it. So you don't want them going in, spending all of their money and just not having anything to back up in case of a downturn in business or whatever.
Absolutely.
Okay.
And the cool thing is that we will allow borrowers who have a business, if they have reserves in their business account, we will allow for them to use business reserves as our reserve requirement.
Oh, wow.
Yeah.
That's cool. Okay.
Yeah.
So, and if you're running a business, usually you've got money in your business. You don't usually keep it in your personal. That's the trend that I've seen. So
Absolutely.
So even if you're using personal bank statements, you will allow the business bank statements for reserves.
Absolutely. Yes.
Oh, that's very reasonable. Okay. So when we're talking about qualifying for a bank statement program, my biggest thing to my clients is that FICO. I see a big drop off in pricing when they're below 700. So 700 above is my target for my borrowers.
Okay.
I like the 12-month versus the 24-month. There are a lot of pricing differences though. So I want to just kind of do some run-throughs with Heather.
Sure.
So let's say a 700 FICO. We got that 700 FICO, 20% down, like regular conforming loan limit. Let's say in Rancho Cucamonga, it's like 500,000.
Okay.
So like if I was doing a regular Fannie Freddie loan, we would be in the 3s with no points on that loan. So what kind of rate would that borrower typically see in a 20% bank statement program?
They
Like a range.
typically be in about 5 1/8 to 5 1/4 range.
Oh, that's not bad at
Yeah.
all. I was doing FHA loans a year ago at that.
Yeah.
Really?
Yeah, no
Oh,
joke.
that's okay. Now, what if that borrower were in the 660 FICO? You could still do it, but then would the rate be like in the mid 6s or something?
They would be like, I would say higher 5s to lower 6s. Now, again, we
Okay.
have several different programs.
Got it.
We have Prime-X, which, to be honest with you, our Prime-X program starts at 3.99. You can do a bank statement loan for 4 1/8.
Yeah, okay.
No,
oh, yeah,
no
but
But the
like,
LTV is going to be at
like-
60%.
okay, so they're going to have 40% equity. They're going to have 780 credit score.
Yes.
3.99?
Yeah, absolutely.
Sign me up. Who wants
Right.
that loan? Wow. And that would be with that. Okay, so then there are other add-ons and other variances where is it a 12-month or a 24-month? 24 months, you do get better pricing slightly. Usually like how much, Heather?
An 8.
So the difference
Depending on the
between
LTV, but
5% to 5 1/4.
yes.
But you're also giving more documents, more explaining, more documenting. But if your income is super vanilla, like you're one of those consistent depositors, then yeah, let's do the 24-month. Wouldn't you say?
Absolutely.
But usually my people are not consistent depositors. They like have stuff all over. So usually just for 1/4%, we're usually taking advantage of the 12-month bank statement program.
Sure.
Okay, so it's a little bit higher for a lower FICO, a little bit lower for a higher FICO. What about like bankruptcies and foreclosures? Is that a big deal when it comes to the pricing hits?
It is. I mean, it's based off of the seasoning of the bankruptcy.
Okay.
So we will, on a bankruptcy 13, we're going to season from the filing date, and for a 7, we're going to season it from the discharge date, and that varies
Okay.
all across the board.
So
on
now
rate.
we're not going to go into this too much, but I heard that somebody can do a bank statement loan when they're in an active 13. Can you kind of give me a little bit of insight into that?
Yeah, absolutely. Yes, we definitely can. You have to have at least a 600 FICO score.
Okay.
No, actually, in fact, we just updated our programs. You can go all the way down to 500. Okay, but you have to have a 0 times 30. No, you have to have a 0 times 30 on your mortgage.
Okay. So usually if someone has a 500 score,
And you have to
that's
have some equity in your house.
yeah, that's a pretty low score. So you've got major stuff happening.
Yeah.
Okay, well, that's interesting, though. For me, anytime I've ever done anybody in a Chapter 13, we had to get permission from the court. And that was that was usually an issue. So in the future, if somebody wants to find out about the bank statement loans, what do?
They need to pick up the phone and call you. And then you can call me.
That's right. So for information and strategies and tactics on how to get access to the best home loans in California, I want you to give me a call. My name's Teresa Timms, and you can find me on the web, thesocalloanpro.com, and I can't wait to hear from you. And thanks, Heather,
Thanks for having me.
dropping all this knowledge on my audience today.
Thank you, guys.